Welcome back to the channel. Today, we're unpacking a development that could position Internet Computer Protocol for a move far bigger than what we've seen from the majority of altcoins in recent months. There's a lot unfolding beneath the surface: activity, burn rates, technical setups, and infrastructure upgrades that the mainstream crypto outlets are barely touching. But these signals matter, especially when they align all at once. So let's break down why ICP might be gearing up for something serious and why this moment shouldn't be overlooked. This video is for informational and educational purposes only. It is not financial advice. Always do your own research and consult a professional before making any investment decisions. Over the past 24 hours, something happened that slipped right past most traders. Roughly 15,600 ICP tokens were burned, permanently removed from circulation. That number may look small at first glance, but in economics-driven ecosystems, burn events of this magnitude are rarely meaningless. Historically, whenever supply shrinks rapidly while demand remains steady or increases, markets tend to react sharply. What makes this even more notable is that this wasn't just another routine burn. It was the largest single-day burn since early September, according to several analysts monitoring the chain. That timing isn't random. Burns of this size usually reflect spikes in activity across the network. More usage means more cycles being consumed and therefore more tokens being removed from supply. Increased burns suggest heavier DApp activity, more developers pushing code, more smart contract interactions, and more demand for computational resources. While retail traders chase short-term hype on meme coins, especially on chains like Solana, those who watch actual fundamentals are noticing something very different on ICP's charts. Several traders, including some widely followed technical analysts, are pointing out that ICP might be forming a textbook Elliot Wave setup, one that might place us right at the beginning of a potential Wave 3 expansion. Now, there's some debate about where Wave 1 officially started. Some argue that the first wave began after that brutal crash earlier this year, the one triggered by a sudden liquidity event. But a more nuanced take, shared by a respected analyst recently, suggests that the Wave 1 origin might be November 1st, which is when volume began shifting significantly and breaking previous dominant structures. Why does this detail matter? Because in Elliott Wave theory, Wave 3 is usually the strongest and most aggressive push in the entire sequence. If that's where ICP stands now, the implications are huge. Consider this. There are holders who have been accumulating ICP since the Genesis launch back in 2021. Through every downturn, through skepticism, negative press, and relentless criticism, they've continued stacking. That isn't reckless behavior. That's an informed long-term strategy. These are individuals and entities who look past temporary volatility and focus on structural value. And judging by the way current metrics are lining up, their patience may finally be on the verge of being rewarded. Let's shift to the technical picture. Yesterday, ICP got rejected at the 0.618 Fibonacci retracement, a level that frequently acts as a reaction zone in trending markets. For anyone unfamiliar with Fibonacci sequences, they are ratios derived from mathematical patterns found throughout nature, and markets often respect these ratios in surprising ways. ICP is one of those assets that tends to behave very cleanly around these levels, which makes them especially helpful for anticipating what's coming next. Right now, the key area to watch is the 0.786 Fibonacci level at approximately $3.03. Staying above this region keeps bullish momentum intact. Losing it, however, would give bears the upper hand and potentially drive price back to previous support levels in the mid-$3 range. For now, though, the market appears to be leaning towards strength rather than weakness. Whales, actual whales, not just exchanges, are accumulating, and that's often how breakout moves quietly begin. And whenever large capital positions itself ahead of time, rallies can come without warning. We've seen this exact phenomenon play out with ICP before: sharp, sudden price expansions that leave unprepared traders stunned. Now, let's talk about something far more fundamental than charts or token burns: infrastructure. This is where ICP stands in a league of its own. On November 24th, Amazon revealed that it plans to invest up to $50 billion into AI-focused supercomputing systems for U.S. government agencies. This includes rolling out 1.3 gigawatts of high-performance computing starting in 2026 across AWS Secret, AWS Top Secret, and AWS GovCloud. At first glance, this might seem unrelated to ICP, but here's the connection. After Amazon's announcement, the entire AI-related crypto sector jumped noticeably. Total market cap in this category rose by more than 5%. Why? Because smart money understands what's happening. Global demand for AI-driven infrastructure is exploding, and ICP is one of the few blockchain platforms built to support heavy computational workloads directly on-chain. And this is where ICP truly differentiates itself. Unlike most blockchain networks that only store smart contracts, the internet computer can host full applications, front-end, back-end, data, and logic, all natively on-chain. No external servers, no centralized web hosts, no dependency on traditional cloud providers. That architecture gives ICP a massive advantage in the coming era of decentralized AI and Web3 services. Even more impressive, Finch Pay just launched globally, enabling fiat-to-crypto on-ramps directly into ICP-powered applications. This means real users can transact without relying on centralized exchanges. And with Zcloak Network building privacy-preserving environments on ICP, environments where seed phrases don't exist and where your passkey directly governs on-chain smart contracts, the ecosystem is moving rapidly toward genuine, user-controlled security models. There's also increasing speculation that the ICP cloud engine could become the backbone of a fully decentralized internet operating system. Rumors surrounding the Utopia project suggest that it may be evolving into something much larger and more ambitious than originally assumed. If that's true, ICP won't just be competing with other blockchains, it'll be competing with cloud platforms themselves. From a historical standpoint, ICP is currently sitting at the exact same price zone that triggered nearly a 3x rally last time it was tested. This isn't just a coincidence. Markets often echo past behavior when fundamentals reinforce those patterns. Analysts are calling this the final accumulation phase, a period where impatient traders exit and long-term investors quietly position themselves before momentum turns. And that brings us to the big question. Technically, the main barrier is the long-standing descending trendline that has rejected multiple attempts at breakout. Price is hovering within a demand zone that has shown strong buy-side interest in previous cycles. But until ICP closes decisively above that falling resistance line, the bearish momentum technically remains in play. If support breaks, a revisitation of the mid-$3 levels becomes possible. But here's the contrarian angle. Markets rarely move in a straight line forever. After such a prolonged downward grind, the next reversal could be aggressive. If ICP reclaims that trend line, shorts could get trapped quickly, creating a squeeze that accelerates upward movement. Is $20 a stretch? Maybe. Is it impossible? Not at all. With burn rates rising, infrastructure expanding, on-chain utility increasing, and leverage beginning to tilt toward the bulls, the ingredients for a significant rally are all present. If the trend line breaks with conviction, ICP could move faster and farther than most people expect. And if the broader market shifts even slightly toward risk-on behavior, the upside becomes even more accessible. In short, ICP is showing signs of a potential major move. The largest burn in months, increasing network activity, bullish chart structures, and ongoing infrastructure breakthroughs all point toward a tightening supply and rising demand. With AI integration expanding globally and ICP positioned as one of the only blockchains capable of running full-stack decentralized applications, the long-term outlook looks strong. Breaking the descending trendline is the key to unlocking higher price targets. And while $20 by December is ambitious, it's not off the table, especially if momentum flips sharply. So, what do you think about ICP's current position? Are you bullish on its growth in AI and DeFi? Drop your thoughts in the comments below. If you found value in this deep dive, don't forget to hit that like button and subscribe for more breakdowns like this. Thanks for watching, stay curious, stay cautious, and I'll catch you in the next one.